Hemang, how have you read into Tata Communications numbers? Muted at best?
Yeah, so is that the performance has been a little disappointing, and the point is that when you have a digital based business model and the overall earnings picture is not showing any kind of a consistency, people would have a little bit of discomfort. Anyway, the overall outlook is slightly clouded because of the way the entire IT sector also is around us. So we think that only from a dividend yield perspective, maybe some of the stocks could make sense, but overall in terms of earnings quality and the linearity, it is not making too much of sense.
What is making sense according to you then? What are you buying? What are you selling?
Yeah, so Nikhil, my take on the market is that the Nifty is unlikely to show any meaningful upside, and the reason being that the Reliance has its own sort of issues. Okay, the GRMs are on a weaker side. IT, we all know that there are some issues. It may not correct much, but I do not see any positive triggers, at least in the near term. Also, some of the numbers from heavyweight like Maruti, and few others may not be that big. So Nifty, I do not see a case for a big upside. The only pocket which is holding out well is to some extent banking, pharma, and a little bit of specialty chemicals. So I think it would make sense to go with some of these sectors, certain banks, particularly where the numbers are likely to be good, be it ICICI Bank, SBI, specialty chemical because of the China reopen. You're seeing some good positive traction. So Navin fluorine is something that should do pretty okay. Pharma, after almost about 5 quarters, is showing a bit of a resilience. You'll see a 8-9% growth. A big IPO is being launched, after a long time. So I think pharma as a sector should do well, and we like maybe Cipla, Alchem. So I think these are the pockets where we would have a positive view.
That's interesting, flagging off a plethora of sectors and stocks that look promising. That's a view coming in from Hemang. We'll get in lots more stocks as well, but let's focus in on Alcoa. It's the largest US-based aluminium producer, and they declared their Q1 numbers with revenues flat in the quarter gone by. Adjusted EBITDA saw an uptick. Let's understand a little bit more from the earnings. We've got Ashesha who joins in.
Well, yes, aluminium stocks the likes of Hindalco, Nalco, Vedanta will be in focus today, and that is because Alcoa, which is the largest US-based aluminium producer, reported its first quarter numbers. Numbers on a sequential basis look pretty good, although they were a tad below what the street was working with. As far as revenue is concerned, it has been flat on a quarter-on-quarter basis, and that is because higher realizations were offset by lower shipments this quarter. As far as loss is concerned, that has narrowed. Company has reported loss per share of about $1.3 per share versus 2.2 that the company had reported in the previous quarter. As I mentioned, realizations were on the higher side this quarter. Alumina as well as aluminium realizations rose anywhere between 7 to 8% on a quarter-on-quarter basis, but shipments declined by about 13% on a QOQ basis, and that is the result. Reason revenues have been rather flat on a sequential basis. But the outlook remains important for Indian aluminium players. They say that they have kept their 2023 shipment guidance unchanged, and they believe that the next quarter will be pretty good. Higher volumes, lower cost of production, and higher realizations will aid second quarter results, and that is why aluminium stocks will be in focus today.
Okay. Duresh, there is no conclusive trend in metals. Why is that?
So we had a huge cycle in metals before, and we generally have this case wherein once the cycle is over, we get into a period of maybe even years for the next cycle to play out. So if you go back to, so the classical way to look at it is all of these metal names. We've seen Tata Steel go up from 2015 to 17, then continue to drift for the next 3 years. Same thing happened between 15 to 16. So overall, the last cycle is done. It got done in 2021, say mid to end of it. And since then, we are in a very, say, consolidation for the last 2 years on a downward cycle. So the trend would be difficult to come in. It could keep seeing those bounces wherein there will be some bounce or 15% bump up, and then again the stock goes sideways. The only way to play metals is to start looking at stocks which have outperformed in the last whole this down cycle, and that is where you keep watching out for a JSW Steel or a Jindal Steel, which starts showing price action. What is interesting is if you look at all value-added metals in the small caps, which is a level up from steels have been doing well. So whether it's a Vardhman, Specialty Steel, Jindal Stainless Steel, a lot of these stocks are actually hitting 52-week highs, all-time highs. So ideally, one should be going beyond metals and look at the next level of metals, which is where there is a lot of value add.
Pipe companies. I mean, what a fantastic Wednesday afternoon it was for some of the pipe companies. Hemang, Maharashtra Seamless, Jindal Saw, APL Apollo, that entire space is making a comeback. Now, this has been a massive wealth creator. Names like Apollo, APL Apollo have really created a lot of shareholder wealth. Is there still some more juice left?
I definitely think so, Nikunj, because when we look at some of these pipe companies, particularly APL Apollo Tubes, and even smaller company like Ratnamani Metals, I think last 2 or 3 quarter numbers have been pretty good, both in terms of volumes and in terms of price. And we think that this is one structural story that one can really look at, where you are going to see a decent growth on the volume side, the kind of momentum that you are seeing both on the residential side as well as on the other category is definitely looking quite good. And the fact is that the mid caps and the small caps, because these pipe companies are typically not large cap ones, that presents a great opportunity because the sector practically has gone nowhere. So these two names, we have a very positive outlook.
Take in particular, Hemang, when it comes to Mastech and the kind of numbers that the company delivered, very strong after 2 to 3 quarters of disappointment, and after the fact that we had, Infi as well as TCS laying out a fairly dismal number.
So definitely, I think it's a silver lining, so to speak, in a sector which is so bombed out by the kind of numbers that Infi delivered and the outlook, that many companies have. But two things I would like to highlight here, Avan. Of course, Mastech, the performance was very good quarter-on-quarter basis. Also, we have to reckon that IBM yesterday reported numbers, and the numbers as well as commentary was not as bad as what Infi delivered. And the guidance also IBM has moved to about 6 to 8%. So I think these are the things which are relatively positive, and we think that the IT as a sector has reached a value zone. Now, when it will start moving up or when we would see positive news flow, that's a matter of time. But I think incrementally these things are indicating to the positivity, in terms of a sector which is bombed out completely.
Okay, fair enough. That's the outlook coming in on Mastech. But Naresh, let's get in your view. Mid-cap IT, how have you seen some of those stocks trending this entire week? Is there anything that stands out on the charts?
So a lot of stocks were looking up for a bounce, did not play out. Very small stop losses got triggered, and then the move has continued on the downside. It's become tough to trade the IT pack because you have very different chart patterns across the board. So say just a couple of days back, we saw Cyient making a new 52-week high, and then you have some smaller companies hitting a new 52-week low. So out here, not really taking a call, waiting for the whole large cap IT results to get done with, and then maybe watch out for a trend. Maybe a sharper correction is where you want to get into it. So for now, the risk reward is not favorable because a single result leads to a 5% downtick on the IT pack. So for now, totally avoiding the space.
Right, steer clear when it comes to IT, according to Naresh. What are the top fundamental stock ideas? Let's hear out what some of our top experts like Dipan Mehta are betting on.
I think in pharmaceutical space, one has to be extremely selective, and even large export-oriented businesses, we are seeing a lot of variance in their performance. And some companies are doing exceptionally well depending upon their product mix and target market, and others are still languishing. And end of the day, it is a complicated industry to analyze, study, and invest in. As a thumb rule, as I said, I think we prefer domestic-oriented businesses. But on the whole, I would like to remain equal to underweight within the pharma space. maybe one or two companies which come to mind, which are the market leaders, have been solid performers like Sun Pharma. Really appreciate their strategy of moving up the value chain into specialty products that will, make them stand apart from the rest of the crowd. And I think Divi's Lab may have seen a turnaround over there. It's exceptional managing a manufacturing company with a very strong value proposition. And the custom synthesis business may have had a couple of soft quarters because of which we saw the correction the way we did. But the long-term prospects of that are phenomenal, and it's an India Advantage company. So I think when the chips are down, you want to invest in a great long-term story, then Divi's Lab kind of meets that criteria. Apart from that, I think broadly we'd like to remain, as I said, underweight. It's a very complicated industry, and there could be a lot of volatility in earnings as well.
Hemang, Aisha, HPCL, very traditional names are making a comeback. Let's start with HPCL. Divestment is not going to happen in BPCL, which means the sector is unlikely to see any kind of a re-rating. What is driving HPCL? Periodically, we see these bouts of excitement in a stock like HPCL.
So I think, Nikunj, when you see the crude prices go down and you see some improvement on the marketing margins front, also the government kind of infused a fair bit of liquidity very recently in these names. So at some point, either from a dividend yield perspective or when you see the crude prices go down, some people get a little positive on it. And recently, if you also have noticed, the GRMs have actually corrected. Singapore complex GRMs and the standalone refiners would have some negative implications. So I think overall we continue to have a neutral view on the sector, but IOC is something that we've been liking because it is a fair share of both the refining, the marketing, and has its own pipeline network and a dividend yield of more than about 4.5% to 5%. So this is the one stock that we like from that perspective.
Hemang, wanted to ask you about what you're making of this latest news from JLR, the capex expansion to now 15 billion pounds, and this is like so much higher than the earlier indication.
Absolutely, I think it's a very big news from a JLR perspective, and our takeaway from this entire news is that the management is committed to its EV foray with more infusion, more models, and a new architecture that the company is looking to build. In terms of the total capex that they have announced, it is pretty much in line with our expectations, and they have also said that they will maintain a net zero debt status. And the double-digit EBIT margins for FY26 is a big positive because the market consensus was not that kind of a margin. The consensus was about 5.9%, and what they are saying is much higher than that. So we do think that Tata Motors would have a positive rub-off because of these developments.
469 is where the stock shut shop in yesterday's session. A lot of other stocks as well, which are going to be in focus this morning. In Ultratech Cement, they've commissioned a 2.2 MTPA brownfield expansion in Patlipura in Bihar. There's Aurobindo Pharma as well, which has got the US FDA for roflumilast. It's used for a pulmonary disease treatment. There's Mastec, of course, which has come out with its earnings, but in the constant currency revenue has come in higher by 5.3%, and there's been a margin expansion of about almost 40 basis points on a sequential basis. There's NBCC as well. They bagged a project worth about 208 odd crore rupees from PWD in Puducherry. So that's another stock which is in focus as well. Kunal, often late, the likes of NBCC, NCC, these kind of construction engineering names, and I'm keeping L&T completely outside of this basket, they're all propping up quite well. Any trading opportunity here?
So NCC is attractive. Yeah. That's a stock which I think has done reasonably well. In fact, in the last 4 months, when the markets went into a correction, NCC managed to do pretty, fairly good for itself from 77, 78 levels. It moved on to 90 plus, then from 90 to 100 plus levels. So it was a very slow, gradual transition for NCC, moving out of its major resistances to now into that 3-digit mark. And again, even at current levels of 100 plus levels, the stock is taking its own time to try and consolidate and show those staggered up moves. So that's an indication that it's not moving up in a hurry. So there is no euphoria which is attached towards the stock price, and that's where the trends can typically last for such stocks. Not sure of NBCC because I think after that fantastic uptrend in the second half of 2022, somehow when these stocks have corrected by 30 to 40%, they have come back to an attractive point of buy, but then the trends have not been very sharp as well as on the upside for these stocks. So I think out of the lot, NCC is something which looks attractive. L&T, of course, something which I flagged off early in the morning as well.
Okay, that's interesting. We'll also be watching out for NBCC on the back of an order win. Meantime, Kunal, you also had some of those rice stocks yesterday that were very active, news-based, but how are the charts looking?
Yeah, so out of them, I track a couple of the stocks. L&T Foods, the NSE code Dawat. That's a stock which has looked fairly attractive. Yesterday, I think the stock closed at 104, 105 plus mark. Again, with strong breakout potential over the near term. KRBL is something which also looks extremely attractive on the charts, and more attractive for KRBL is the consistency of price uptrend. So you look at the stock over the last 2 years, 3 years, 5 years plus kind of a time horizon. The stock has done consistently well, managed to absorb those phases of volatility. Went through time-wise correction, and then whenever the stock gets into a breakout mode, it starts off a new trend for itself. So I think both these stocks from the rise pack look attractive.
Right. Hemang, just leave us with 1 or 2 stock ideas where you have a buy call at Motilal Oswal.
So, Aisha, recently we have upgraded the realty sector. So, Godrej property is something that we like, and we think that though the business traction was very good, somewhere the corrected by almost about 40% because the profitability had its own toll. And recently, when the interest rates started inching up by more than, let's say, 225 basis points, people had their own doubts about how sustainable this entire real estate story will be. But now that there is a pause and the overall guidance from the management continues to be very good in terms of what they will deliver with a focus on profitability. So that is something that we like. And apart from that, the NBFC space, I think, would have a positive rub-off of this entire, rate pause. So something like Poonawalla FinCorp, M&M Financials, I think these stocks should do well, because of the fact that the interest rate environment is going to be far more favorable.
All right, thanks very much, Hemang, for taking time out and joining in, giving us your top stock and sectoral themes.